I am personally bullish in China. I like India and China for the moment. I think China is clearly balancing reform and growth. I think they'll come through. I think clearly there are going to be some hiccups. They're starting to make the right signs. They're starting to, push some of the speculative flows away. On India, they've made some good moves on the current account side. Clearly elections are a big risk, but the central bank governor is very credible and he's made some really good moves. I like Mexico. I think Mexico's got some real positive headwinds. 2015 clearly is a big year for them. They'll get massive energy-related inflows. The FDI flows have been strong. If you look at Mexico-China, the exchange rates, Mexico's depreciated 50%. Why it's important is, clearly they're much more competitive right now, and they're getting a lot more corporate flow coming in. So there's real basis. Why is it weakened? It's because they have a lot of concentration of foreign ownership in the domestic sector. And the second component is they're seen as a proxy on the LATAM sector, and they're one of a few deliverable currencies. So, they get hit in terms of any contagion. I also like Korea. I think Korea's stock market's gotten beaten up. It looks good. The growth is strong, 3.9%. So, selective markets I like.
Well, how are you viewing the volatility in emerging markets from the start of the year till now, Vinit? Because, off late, of course, the last couple of sessions, it's been a roaring rally, really, all-time high levels coming in for the Indian market. The emerging markets are rebounding. But, what we've seen from the start of the year till now is that it's been pretty much volatile for EMs. Do investors see every dip in emerging markets as an opportunity to buy or a sign of more trouble?
I would ask them to be very selective and careful, look very seriously at where the value is. Again, I keep coming back to this. I'm a big, when I look at a long-term investor, I really want them to start looking at fundamentals. I want them to start looking at, where real rates are, what's the fundamental backdrop. So, those are key components. They have to be cautious of liquidity. I think the last few weeks, what they've shown us is the windows to exit are quite small. So, it keeps coming back to this. I want people to really focus on some of those things.
But how is India being profiled among emerging markets, especially within Asia at this point, given the market is at record highs?
It's positive. I'm positive, and I think you can see the way the currency is reacting. It doesn't have the same volatility some of the other EM currencies are having. I think people are definitely happy with what the central bank governor is doing. Raj is taken some really good steps. If you see positive developments in current account, I think those are important for India. It's literally halved in the last 6 months. Elections are a key risk, so no one's jumping in a big way. I've seen some switches where people are selling some debt of Chinese banks, they're buying Indian banks. I've seen the same out of Korea into India. So people are starting to make some inroads, but they're a bit cautious ahead of the elections.